All right, good morning. Good morning. I'm starting just a few minutes early for a little bit of housekeeping. I do have kind of an idea of what's going on with the Restream audio issues. And um, basically, I used too many streaming programs, and somewhere along the way, some drivers got corrupted. The PC is going to be shipped to, the PC guy, Bob. Bob's going to fix the PC. But I also have a brand new 2022 Asus in the mail. So one way or the other, in a few weeks, I'll be on a rebuilt machine and then a brand new machine, and we'll have that issue fixed. Unfortunately, you'll just have to tolerate the madness just a little bit longer. This morning I am trying something different. I'm running OBS into Restream, so maybe this is going to fix it. A temporary solution until we get back to it, right? We'll see. So either way, in a couple of weeks, we'll have this sound issue fixed. All right. These morning briefings are designed to help you put together a morning routine, right? Of course, I end up giving you my analysis in the morning, but that's really not the goal or the purpose here. I'm not trying to give you a fish. I'm trying to teach you how to fish. You're going to want to repeat these steps as we get closer to the open because a lot can change between now and then. I have done a video that that I first used when I was trying to teach people how to put together a morning routine, and I think maybe one of the reasons that people don't use that video as much is the title is a little off. It's a trend day checklist. But if you were to go to YouTube and search Bullish Bears Trend Day Checklist, you'll see the original attempt that I had made to teach people how to do a morning briefing or a morning consult or a morning perspective. You want to have a consistent, persistent routine, right? It's the same thing every single day. Start with what happened in the overnight hours. Finance Juice does a really good job of this, and it's free. Certainly not the only thing out there. When you go to Finance Juice, it has a list of speakers. Anybody who's scheduled to speak today. And I love that because I can tell you when I was newer, I used to hunt all over the place to find that information in the morning. And sometimes some places would give you the information and then other times they wouldn't. And so it was just really tricky to get that. Now, every day I just come here and there it is. All right, so we do have Barkin at 8. We got Williams at 11. And then we have a governor at noon. Finance Juice also does a market wrap for all three of the major markets. So the Asian market wrap, Europe wrap, and then the U.S. I like this because if there's something that moved the market, say in the middle of the day, our market just takes a substantial move. And I look around and I can't find what caused that move. A lot of times after the market is closed, I'll come in and look at Finance Juice and see if they have an explanation for what caused that move. It's also a good way to see what happened last night. How did Asia do? How did Europe do? Were there particular sectors that did really good or really bad? Because one way or the other, if it was really good or bad, it's very likely to bleed over into our day. And it would give us a good place to start. When you're in here, you want to look for things that can become blown out of proportion or last for a while. The example that I usually give is when that ship got stuck in the canal. That turned into a whole big old deal. Most of the time, you're going to not find something like that, right? Because there's not a global crisis going on every day, right? So most of the time, nothing. Hey, no problem. This is where you could also get a heads up on any investor day conferences or new product releases, earnings. For an example, everybody's talking about Apple's new phone, right? They're coming out with a new phone release. When it comes to something like Apple, probably looking into its supply chain company names would be a useful task. But if there's a big earnings or a big name that's going to have earnings, you're likely to see it here. So it's a good place to start. Bloomberg has an email that they can send you as well. It's free. You don't need a Bloomberg account to get it. And there's a few others that do that sort of thing. So just kind of hunt around, find a way to put your morning together with external sources. Right? I constantly see people say, well, I think the market's going to do this, and I think the market's going to do that. Seriously, nobody cares what you think. And you shouldn't care what you think. Especially if you're new. Keep your opinion out of it. Keep what you think out of it. Find resources from consistently accurate sources and see what they have to say. Use technical analysis, not your opinion, not your feelings, not your gut. Especially if you're new. You don't have any instincts in this. All right, so Powell was scheduled to talk Friday for 30 minutes, and he talked for 8. And he basically said they're going to continue to bring the pain until they see a clear and convincing change in the trend of inflation. End of story. Now, it's nothing new. That's what they've been saying. But every time he opens his mouth, traders seem to see doves flying out of that thing. So this time he made sure they saw the spiders crawling out when he opened it up, right? They give you the little shivers there. The thing is, as we're going to see here in a minute, the market's not necessarily bearish. All right, so like we do every morning, go to Market Watch. Go to the calendar. If yours is really busy like this and has a bunch of stuff all over it, just turn everything off and then turn on the Econo Day event. You can move these things around, so just put the time next to the description. And you can see that besides the speakers that we have on deck today, we also have the Dallas Manufacturing Survey at 10:30. We've got additional auctions at 11:30. Pay particular attention to those auctions. I can't tell you how many times I've seen a market completely reshape its afternoon starting right at one of those auctions. Say we were down on the day, suddenly we flip and run higher. We were up on the day, suddenly we flip and run lower. We were sideways, suddenly we break out and begin running. Watch the clock at 11:30. The manufacturing survey is not anticipated to be very impactful, but that doesn't mean that it won't be. There are times where we have economic things on deck that generally don't cause any concern, and then that one day, for that one reason, we suddenly have something causing concern. So just watch the clock, 10:30, 11:30. We hit the 50-period daily moving average last night. Okay, so we didn't hit it. We missed it by, what, 2 ticks? Close enough. We hit that 50 SMA, and that is on the daily chart. When we talk about doing a top-down approach, go out to a daily, a weekly, a monthly, and just look around. Put on some of your favorite moving averages and see if we're moving towards one of those averages. Are we going to hit it today? Or are we moving away from one of those averages? Did we already hit it? Mark that average out on your chart and then go back into the intraday. And it should last through the day. I mean, yeah, sometimes you have to go out and mark them again, but for the most part, it'll do. So we have a head and shoulders. It's a little ugly, but it's there. And the 50% target has already been hit. If you use the quadrant lines drawing tool, measure from the neckline or the neckline break. Measured moves often use the 50% and the 100%. We hit the 50% last night. Alright, so just for the visual, the dotted orange line here, that is the 50 SMA. That's where we hit it. So right now we got the 10-week over our head. That's considered bearish when we're under the 10-week. How far away from the 10-week we are also becomes important. Same with the 10-day. When we get too far away from the 10-day and the 10-week, the market pauses, consolidates, and or moves back towards that 10 again. Now I made an indicator that kind of quantifies, well, how far away from that 10 are we? Because every market is going to have a different number, right? Tesla might have a distance that it gets from that 10 before it decides, all right, that's too far. We're really close to the 10, which means we have the room or the capacity to make a reasonably decent move in one direction or another, and it wouldn't be considered too far. Right? We want to look at where the average reversal is. On the ES, when we're above the 10, the average reversal is somewhere around 4. That's 4% away from the 10. And on the downside, it's closer to 5 when it gets that reversal. Right? Well, maybe I need to be a little more accurate there. 3.5. Now this is a 5-year. I usually keep it tightened up to around a 1-year. And that way I can just look back and see what it has been doing recently. We failed to hold above the anchored VWAP. This VWAP is anchored at the start of the year. When we're above it, it's a good, clean, strong, healthy market. And when we're below it, it's a bearish market. Right? So I mentioned that the market's not necessarily bearish. The head and shoulders is a bearish pattern, but it's completed. We're done. We've hit the target. That's all that it owed, and it already paid it. We're also at a pivotal, critical level. This pullback could very easily be a trap. And once it springboards and begins to rally back up and we break the 50% level of Friday's candle, we would start to activate selling parameters or closing parameters for anybody who was short. That squeeze is called a short squeeze and would add fuel to the fire, because how does a short trade get closed? Well, they buy to close, so it adds to the buying. We've got a reasonably decent volume level. We're not in the extreme. We're not really light. And that's the only thing we really use this bottom one for, to kind of get a gauge. Super light or crazy super heavy. It's neither one of those. We no longer need it. We just turn that off. We're below the daily pivot. We're below the weekly pivot. And it is an MDP, missed daily pivot. That's a fully formed trade strategy, by the way. If you were to search MDP trading strategy or missed daily pivot trading strategy on YouTube, you would find an explanation and a detailed description of it somewhere. It's a pretty popular strategy. We have a 50% retrace level, which basically is pretty close to the 50% mark from Friday's move. It also ties into Wednesday's Globex low. So there's only three things that the market can do: maintain inside of yesterday's range, break outside of yesterday's range to the downside, break outside to the upside. We are already broke out to the downside. Now the gap is almost filled, but we closed Friday around 40.42, and in the overnight hours last night we made it to 40.41, or close to it, right? So maybe a point, a little more. Technically it's not closed, but that's pretty darn close. We're still going to look for that to be closed at some point this week. And again, keep in mind, the market has not turned bearish. Friday's move was just one day, one move. And it may have felt extreme, but it went to its target the way it was supposed to. It wasn't out of control at all. So now that we're already broke out, let's game theory here and figure out where we're going. There is a major cog line at 40.31. We have an ADR of 1.6%. That's a $64 move. There's no market maker move yet. So if we were going to continue this bearish posture, we've got the ADR half at 39.91. The June 50% retrace, 39.85. An untouched volume profile point of control called a VPOC, 39.76. We got the OPEX close, 39.63, and the weekly expected move low at 39.43. We also have the full ADR at 39.59. Now that ADR represents a normal move in the market. If you remember Friday, we mapped out an extreme level because we kind of had an idea the market was going to get extreme Friday. You take the ADR, cut it in half, and add it to the ADR. All right, so if the ADR is $60, cut that in half, it's $30. Take that 30 and add it to the original 60, you have a 90. I like to use percentages, so instead of a 1.6, it would be 1.6 plus 0.8. That'd be 2.4. So from the close, and I do use the close, not where we opened, 2.4 gets us pretty close to the edge of the weekly expected move. Now, if we consider an overly extreme move, then it would be double the ADR. So if it says 1.6%, I'd go with 3.2%. Friday we moved 3%. So it would not be out of line to see the market make a 3% move, right? Although you got to kind of figure how many times in history has the S&P made two back-to-back 3% moves? Not very many days, right? I'm sure that it's happened, but it'd be a rare thing. Still, that would get us around the volume point of control at 39.25. I would aim for the 39.11 cog line. All right, so easy numbers to remember. If things get extreme today, the way they did Friday, aim for the EM low first, and then the cog line at 39.11 second. That would be your two extra levels, and they are extreme levels. So another thing that we could do is get back inside the box. Get back inside of Friday's level. Now, an inside day is usually a very valuable tool, except Friday's day was 3% wide. We are likely to be sitting inside of Friday's level most of the week if we don't continue to sell off. We could literally just spend the whole week sitting right there inside of that 3% range. If we get back inside of Friday's level, we would first need to get through the open from last night, which is 40.23, then the cog line at 40.31, then our own Globex high at 40.40, the close of Friday, 40.42, the ADR half, 40.56, 618 June retrace, 40.65, the full ADR at 40.88, weekly pivot points at 4,100, cog line at 41.11, and a CPI. I went out to the days where we had CPI and I marked the high and the low. That is the low of the day where we had a CPI report, and that'd be 41.14. The 50% retrace from Friday's move alone is at 41.30. I really recommend marking that out and carrying it forward through the week this week, or carrying it forward until we ever get back up there and close that. And then there's the expected move high at 41.42. Like I said, we're very unlikely to get outside of Friday's level this week because the expected move is a long ways off from the high of Friday, and we're only projected to make it to the edge of the expected move. Now, of course, we've broken expected moves quite a bit lately, and there's no reason to think we couldn't break this week's expected move either, but still. All right, 10-day, 30-minute volume profile. There is nothing on the profile lower than where we are. It's a very wide profile, obviously. It's shallow over our head, which makes perfect sense because we didn't spend a lot of time in that zone, so we should be able to move through it relatively quick, which means if we can get back inside of Friday's low, we should be able to get to 41.20, maybe even to the cog line or to the point of control at 41.42 without extreme resistance. Once we get through that point of control and through the other side, we have another shallow area which starts to present resistance at 42.40 and then 42.80 and then back to 43.27. I mention all those levels because that's what's in store for us over the coming weeks if we don't continue to fall off, right? That we have to work our way back up through these levels. When we're at the low, we say we are expected to go back to the top. And when we're at the top, we expect to go to the low. So that's our expectation. Right now, it doesn't owe us that. We have to wait and see it. We wouldn't just go out and pull the trigger because, oh, well, we're on the edge. Nah, no. All right, mapping out the 5x5. Basically, that means you take a 5-day, 5-minute chart, bring it up, mark out your pivot points. Open, high, low, close of the previous 5 days. Carry forward any points of control that have not been hit. Right, like we had one right there on Friday until it got hit. Right now we take it off, we wouldn't carry it forward anymore. Fridays is now active. You would want to mark that and carry it forward for the day that we finally get back up there and hit it. Now, I've been carrying a lot of these for a while. That's just the way it is, right? You put them on there, and on some of these lower ones, maybe you hope never to see it again, right? That we don't go back down and hit that level again. So that's 41.90. We'll call it 41.95. Same thing with the ES. We have a head and shoulders here on the daily and the NASDAQ. The 50% target has already been hit. You can see that we're underneath the 50 daily. So the NASDAQ's got that as a resistance. It's going to need to overcome that before we get back up. It becomes a pretty big deal. We're not very far away from that 10 right now, so the NASDAQ has plenty of room to move. That uptrend that we have is done. It's done in the S&P. It's done in here too. We set a lower high, a lower low. So now that we've set a lower low, that invalidates the trend that we had. So we're going to be looking for a new trend to be established. It can be a new uptrend. Nobody says it has to be a downtrend. But the old trend is done, right? So that old move, we're done with it. We want to start seeing higher highs and higher lows again. So the target right now is to get back above Friday's level so that we can start setting that higher high. And we need a pivot where we've got a higher low. So that's kind of the goal right now. But either way, we don't have a trend. It's really important to recognize when we don't have a trend, because when we don't have a trend and we find patterns, we don't quite know if the pattern should be ignored or validated because we don't have a trend to apply it with. Say, for an example, that head and shoulders. It was at the top of a trend. So it was a head and shoulders that showed up where it's supposed to show up. It has more validity to it, rather than finding a head and shoulders at the bottom of a trend, which doesn't make any sense, right? We wouldn't want to trade that one. So a pattern works better when it fits in with the rest of the market's trend. Well, we don't have a trend. We're waiting to get some formation of price action to establish a new set of guidelines for what we're working on. Continue to mark out your levels and ask that question, where are we going? Where's the next pivot point lower? What's the retrace level look like? This is the NY FANG. We use this ETF as a proxy for the monsters of tech, right? This represents those 8 or 9 names that all make up the monsters of tech. Notice that it didn't crash and burn. Sure, it was a down day, and it was a significant down day, but nothing extreme, nothing out of line, and it's still within the boundaries of the previous week, right? Friday didn't set a low on the week. That's one of the reasons that I'm not quite bearish this morning. Sure, obviously I'm not overly bullish. The market is down. But we're holding those lows that we set last night. We're not getting worse. At least not yet. We continue to see the dollar sell off this morning, and a weakening dollar is really going to help our market right now. We got the VIX kind of stabilized around 27. I'd like to see that get back below 25 sometime today, but this is just one of the reasons that I'm not overly bearish this morning. Now, I just jumped through a bunch of different monsters of tech names, and they all had a significant down day Friday, except Tesla, which has been doing its own thing anyways, not really playing with the crowd, not playing with its sisters. And on the week, it didn't set a new low on the week last week. And look at Friday's close. We were still within the boundaries of the entire week. These are the midline sectors: industrials, building materials, and energy. Energy didn't get whacked half as bad as the others. Industrials set a new low on the week, but building materials didn't. Industrials are below that 200 but still above the 50. Same thing with building materials, but energy's above both the 50 and the 200. Consumer spending in the household, or consumer staples, set a new low on the week. So did healthcare, and so did utilities. So all of our defensive names got whacked. And that makes perfect sense because we were in a highly correlated market state Friday. Everything was selling Friday. So even defensive names, when the market goes down like that, everything will go down. Commodities, energy, precious metals. Basically, the only thing that wasn't going down are things that had earnings or news that was giving it its own boost, and the VIX. Financials, technology, and consumer spending on the frivolous side. That Head and Shoulders is the cleanest on XLY out of these. Tech's got kind of an ugly one, and finance doesn't have it at all. There is now, though, a significant gap up there on these three. Well, in these two, I'd say this one is done. But we do get that 50 period moving average on tech. Should be a part of the are we going to find support criteria. So with energy being one of the better names right now, try to break it down. Which energy? Oil and gas, production, green energy, refinery. XLE and XOP are above the 100. OIH hit that rejection level on Thursday or Friday, or I should say Wednesday and Thursday. And then USO, same thing, hit a rejection level. Needs to get above those two. So it's important when you talk about energy, which one you really want to focus on. When it comes to major market sell-offs like the 0708 or the Y2K 2000, once we started selling off and we get that rally to the upside, the 618 fib is a real popular reversal level. If you were to go back and study each one of those market sell-offs, those major market sell-offs like Y2K and the 0708, we rallied up as a part of that continued sell-off. We had a bullish rally in that bear market that tagged the 618, just like we got here in the Qs now, right? That we got it mid-August. We've sold off since then. Had a little bit of a bump the other day and made it to the 50%, and then of course we sold off Friday. Same thing with the S&P 618 retrace. These are some levels from Mitch Snyder. She's the one that publishes the she's got a little name for it. She works at Market Gauge, and she has this daily publication where she uses family members to represent the different major sectors in the marketplace. And every day she comes out with this free email where she kind of lays out what's going on in retail, transportation, financials, and then gives out these levels. These are more of my own levels. This week, the SPX needs to close above 39.97 if we're going to remain even remotely bullish. And the Qs needs to close above 303 to keep any sort of bullish bias. All right, well, as you can imagine, most of the sectors are down this morning. Natural gas, IYH, which is like healthcare, USO, which is oil, and that's about it. 50% or a half of a percent is my benchmark. So if we look at what's down this morning, gold, basically everything, right? You got a couple that are kind of flat. And since those names are less than the names that are down, I'd probably focus on those. Crypto had a significant sell-off in the overnight. So I'd be watching for those, because with the rebound that we had last night and the fall that we had on Friday, we could get a nice reciprocation play here. A little bit of mean reversion getting yanked back in the other way. Think about a bungee jumper that reaches the edges of that stretched out rope and then suddenly getting yanked back in the other direction. Tasty Trades built a trade strategy on that they call the aggressive contrarian trade strategy. If you were to Google Tasty Trades aggressive contrarian trade strategy or search for that on YouTube, they went all around the United States and laid out pretty exact details. It needs to travel, X amount of distance within X amount of time, and then you take a trade going the other direction. Now, obviously, nothing works all the time. And I remember that Tom Sosnoff tried to short Apple and Tesla in like 2019 because they went too far too fast, and it ran him over, right? Which kind of goes back to you wouldn't want to blindly follow a strategy just because, and that it's a really bad idea to bet against Tesla and Apple when they go into full-on bull mode. The ZB has expanded greatly from where we closed Friday. That's the 30-year bond. We want to see that get back up there. Bonds go down, rates go up. So as you can imagine, the 30-year rate, pretty significant this morning. ZN is the 10-year, also big move to the downside. If we look at the yields this morning, I'll just take a picture and put it in the chat between the 10, the 2, 10, and 30. You can see the yield curve is still greatly inverted. $33.78, $30, $39, and then $32. So it's forming a little bit of a U shape or a V shape. And then it looks like we had a contract change with the VIX, although well, never mind, because I'm not on the VIX futures. That's just a gap up. I would still expect to see the VIX calm down a little bit. But significant sell-off in crypto, so I would look to see if there's any kind of mean reversion there. It's got some really cheap and yet really liquid options that are fun to focus on. The EV market took a pretty substantial hit. Want to try to focus on things that have fallen or have suffered the most, because they're going to be the thing with the most likely reversal structure. So looking at the EV market this morning, Ride, Ford, NIO, GM, XPEV, Lucid, Lee, they're all in the beatdown. And when we're talking about a highly correlated market state, it often helps to deviate from what 80% of the market is doing, right? When we talk about diversity. With diversity, it's not always trying to find an up market in a down day or a down market in an up day. It's diversifying away from anything that has a high beta that is correlated strongly with the S&P. Things like pot stocks or commodities, precious metals, bonds. So we do got some pot names. These were just starting to pick up in the last week or so, that short interest squeeze. And if we're going to rally up off of these lows that we just set Friday, we need to see some of the things that rallied us up off the lows year to date, right? That July 15th reversal when everything out there suddenly started picking up. There was institutional FOMO, short squeeze in significantly shorted beatdown names, which also triggered the whole GameStop Reddit run again. So we want to see those start to pick back up. Seeing some pot names up this morning is a good start. Also, those Chinese tech names were getting a lot of flow. So we want to keep our eye on those, start to see those come back around too. All right, so these two bottom lists, they're just called weekly options. I had to make two because TrendSpider won't let you make a watch list with 600 names in it. And there's just around 600 names that have weekly options. So I broke the list somewhere near the middle. No rhyme or reason to where I broke the list. I just had to separate it. And as you can see, there are a lot of names that are up this morning. They're diverse and scattered out there. But there are longs that have weekly options. So, there's always something to trade. I see BBBY this morning. That fits right in with that statement that I just made about short interest names catching some flows again. Now, I'm not suggesting that you try to buy into this. Instead, think about where you would want to sell calls. Right? And these things, they were getting pretty pricey. Sell a $10 or $11 call up there somewhere, and then have it dump back down. It's like one of the most obvious shorts of the year. Some of those tech names, JD, Baidu, those China tech, were catching some really decent flows. It's a whole It's a whole thing that's going on, right, since that July 15 reversal. So high float, high short interest, heavily beaten down names. That's one side of the focus. I wouldn't short it. I'm saying that these names are the ones that are rallying to the upside. You want to find things with high short interest. Now, for BBY itself, I would sell a call up here, because if you sell that call for $10 and 2 days later you can buy it back for $2, you just made $800 in 2 days. So wait for it to explode and then sell a call. Simple as that. For the list of names to focus on, it would be the high short interest names. JD, BABA, GameStop, AMC, even Kroger got into it, right? Basically, on the Discord, you can run a scan for high short interest names, and you can run a scan for whatever Wall Street Bets is talking about, which is a really nice shortcut if you're trying to figure out, well, what names should I even be looking at? I don't want to trade AMC and GameStop, and I don't want to trade those. Look at how this thing went stupid parabolic. The options cost, if you were going to try to be the buyer instead of the seller, would just be crazy, right? And then they're just going to dump it on your head anyways. Let it get its rally. Let it get that spike right into a major resistance level, and then short it. And by short it, I mean just sell an option on it, right? Now, those China names, they're not moving like BBBY. I wouldn't want to run out and short those, right? I would short things like BBBY because they went triple their cost in 2 days. You know, it went from an $8 stock to a $30 stock. And we knew that it was all Reddit capable, and that the Reddit crowd couldn't sustain the buying pressure, right? When an institution goes in and spikes something up like that, they'll continue to buy it for 3 months to build a position. Those Reddit crowd, they can't sustain the move more than 4 days, and it starts to fade back out again. But for those beaten down tech names, we're coming up into a spot where the House and the Senate and the stock exchange are all going to decide to get these things off the delist threat, or they're going to delist them, one or the other, right? That decision is either just happened or it's really close to happening. So for JD, Baba, Baidu, all those names that took a beat down because there was a threat of getting delisted, if they remove that threat, a lot of these names are going to come back up with strength. That'll be a different move. That won't be the same as that short interest squeeze that's popping them to the upside that we would want to short. It's going to be completely different. But I would still keep my eye on those tech names, because they are in that category where they could get a significant short squeeze. But on the Discord, we have the bots. Everything keeps moving around. Seems like every day I come in and find them in a different spot. See if somebody already ran the command, and if not, I'll run it. Yeah, no. Bum, bum, bum. All right, there's the Wall Street bet command. That's a really fast way to see what they're focused on. Obviously, BBBY is on there. GameStop. But there's another command that we can do to get just the high short interest shorts. HSI. You'd think I would remember that, but no, I keep forgetting it. I believe Dollar Tree was on this one too. BBBY, Upstart. Oh yeah, Big Lots. Not Dollar Tree, Big Lots. Beyond Meat. So a couple of bigger names. Kind of a surprise to when, and those names have been on there for a little while now. Those bots are pretty handy, guys. They can save you a whole lot of running around. It's going to continue to be finance and energy for me on the intraday. And for the rest of it, I'd be looking for a little bit of mean reversion. I would not go jumping into this market both feet short. All right, hopefully I've gotten that through to you guys, that don't assume that the sell-off from Friday is going to continue. It may. I don't want to say that it won't. But don't just assume automatically that it will. One of the things on the argument for the idea that it might not is the fact that we're still holding from the gap down last night. Now this, this could just be a pause and then we dump down anyways and continue to fall. But the fact that we haven't done that yet, check mark on the bullish side. Plus some technicals that really I've been streaming long enough, we're not going to get into them. But there's some technicals that point out that this very likely could rebound, whiplash right back up with strength and break above 4,200 by the end of the week. All right, so everybody just approach with caution. Be careful. Keep your eye on Finance Juice because we got speakers today. Have a good week, and I'll see y'all tomorrow.